welcome to this ITSA webinar. It's our second webinar, and today we are going to talk about payments. And I think payments is one of the more interesting topics lately, especially also with the MiCA proposal by the European Commission. And this is also a perfect transition to first introduce the ITSA a little. The International Token Standardization Association does exactly that. We work towards market standards for the global token markets. And for that goal, we work on three projects. First, the International Token Identification Number, the ITIN, which really is just a unique identifier and will bring more transparency to the token markets. Then the International Token Classification Framework, which at the moment really is very, very interesting because we also work on a new dimension to capture exactly how MiCA classifies tokens. And as we know, MiCA is heavily focused on, I would say, at least it seems to me like that, on stablecoins. And so we have the direct links to payments here and see how important it is to have market standards. And so we share that sentiment and try to achieve exactly that. And lastly, while we provide the unique identifier, deep classification so that people really know what they are holding, what token they are holding, buying or trading, we combine it with a database, the token base, so that people can do extensive research and make clever investments and really know what they're dealing with. And I think with that, I have said enough about the International Token Standardization Association. So let's come to our guests. You can see them here. I will introduce them very quickly, and then we will make a round. So we are joined by Jag Sidhu, or Jag, from Syscoin Foundation. We are joined by Gustav Arentoft of MakerDAO, and lastly by Georgy Sokolov of Wirex.
So my name is Gustav. I'm responsible for the European business development at Maker. I've also done a lot of our projects in both Asia and Africa. And I've been with the project for a little bit more than 2 years now. So the Maker Foundation, which I work for, is basically the team behind the MakerDAO protocol. The MakerDAO protocol issues a stablecoin called DAI. DAI is the third largest stablecoin in the market with almost $900 million in circulation. And we are the only significant decentralized stablecoin. So what we really have created is like the first like truly unbiased currency. And when I say currency, it's because since it's a stablecoin, it has the properties that you actually want in a currency. So it can function as like a medium of exchange, unit of account, and thereby like a means of payment. So we do a lot of work in the payment space as well. But it's just like one of the many use cases for DAI. We're also the market, one of the market leaders in this like ever-evolving space of decentralized finance, and we were one of the first projects in that space as well.
Yeah, thank you very much, Gustav. And lastly, Georgy and Jag. I have to give you a little apology. We had some sound issues, so people couldn't hear you. So after Georgy, I would ask you to introduce yourself again. Sorry for that. So Georgy, you go next.
Well, firstly, I somehow missed the moment when DAI went to 900 million in circulation. So congrats on that, Gustav. There's a big partnership between Wirex and Maker, and the DAI is so far the only stablecoin on the platform. And yeah, it's amazing to see the growth in the space. Anyway, I'm Georgy. I'm one of the co-founders of Wirex. Been with the project almost from the very beginning, from 2014. Wirex, for those who haven't heard, we were the first company to launch the so-called Bitcoin debit card. That was back in 2015. Was very basic functionality, just 2 pages of website. One allowed you to top up your Bitcoin wallet. The other one allowed you to convert those Bitcoins into dollars on your card. It's evolved a lot since then. So now we're pretty much a neobanking app with all the functionalities of the neobank. You get your cards, your IBANs, You can make bank transfers, you can link external cards, you can top it up, you can spend in various ways, send funds, receive funds via bank transfers. In Europe, it's SEPA and SWIFT. As we launch in other regions, we will be adding more local methods. And then you also get crypto wallets within the same app. And that's what makes us different from most fintechs that we often are compared to. So unlike a traditional neobank, you get the proper crypto features within the same application, within the same system, and you can seamlessly, instantly, and very cost effectively convert between any currencies, whether it be fiat or digital. We are live with the cards in Europe, in a number of APAC countries, and we will soon be launching in the US. What makes us different from a traditional blockchain or cryptocurrency business is the approach to licensing. So we're pretty much licensed in every, either already licensed or in the process of obtaining licenses in every jurisdiction where we operate. The first one we had was e-money license from UK FCA, which we received over 2 years ago. And now we're in the process in Singapore, in Japan, in the US, in Canada. And quite recently, the most significant development was our principal membership license with MasterCard. So from now on, we're able to issue our own cards, which not even every bank does directly. That's short. That's it in short.
Okay, thank you, Georgy. And now, Jack, I can ask you to go again.
Yeah, I'll keep it short. I'm the CTO of Blockchain Foundry and developer of Syscoin. We developed Syscoin for the basis of sending, receiving money and asset tokenization for enterprises. And so recently, a lot of the focus has been on stable coins and some loyalty type of systems. Those are the two main kind of silos of tokenizations we're finding on the enterprise side. And on Blockchain Foundry, we're a general purpose consulting practice working on digital identities, a little bit of supply chain, and mostly payment infrastructure.
Okay, thank you very much. And I would say after these introductions, let's get started. We want to talk about payments. I think now you guys as viewers have quite a good understanding why we brought these three, because they all are connected to payments, but from really different angles, which I think makes it really, really interesting. And so my first question is really broad and general, and I would just ask you maybe to give a somewhat quick answer as well. What do you think currently are the challenges when we talk about payments? And I don't only mean in crypto, so for example, not only maybe missing legal certainty, but also in traditional payments. What do we see, and how do you guys work towards solving these problems?
Maybe I can kick off. So I think like one of the things that we see quite a bit is that like I'm gonna be talking mostly from the DAI perspective, right? And that's really that payments is usually a function of scale, right? So like the adoption of the said currency really depends on like where you can pay, right? Because like people don't really want to start like putting a lot of work into accepting something like barely a lot of people actually owns. So from like our perspective, we try to work with companies that allows us to hook into the more traditional rails. This is where we, for example, work with Wirex. I actually have one of the older versions of the card lying here. I'm looking forward for the new MasterCard version. So I think from like that standpoint, we see these things really coming like more as the adoption grows, more as like the scale grows. Which also means that in like places where you already have like more significant adoption, those are usually places where you would see cryptocurrencies being used as payments more frequently, right? So I think like that is like some of the challenges is like how should you actually when should you start caring about crypto as a payment, and like what benefits does it have to you? There's of course some like unique cases like like online commerce and stuff like that, where you can tap into like a more general market, or like very industry specific cases where you're selling like services or goods, for example, directly towards the crypto industry. Then it makes a lot more sense because the adoption of your user base will be much higher.
I absolutely agree, and maybe Jack or Georgy, could you go next? So maybe Georgy, because what Gustav said, when we talk about mainstream adoption, this is something we talked about. What does need to change that not only Gustav uses one of your cards, but for example also my father? What's missing yet?
Well, actually, nothing is missing. Your father can start using the cards straight away without having to know anything about crypto. And so basically, you just install the app, you get verified, you get your card, and you can top it up. You can top it up with cryptocurrency if you want to, if you know how to do it, if that's what you need. But you absolutely don't have to. Quite a frequent use case on our platform is people getting the card, linking another card to it, or topping it up via, I don't know, in the UK. Let's take a concrete example. In the UK, for example, what I could do is top up my Wirex account from my main bank account from Lloyd's, or from my Lloyd's debit card, and just use Wirex card instead of the Lloyd's debit card, and get crypto back, get cash back paid out in Bitcoin, just for any purchase you do in store. So that in itself is already a good enough incentive for someone not familiar with crypto to start using it. And then once you've accumulated a certain amount of satoshis in your rewards wallet, people tend to get interested. Well, what is this? How can I spend it? How can I get more? So that's it's proven to be quite an effective tool of bringing people unfamiliar with blockchain into the space. But what's missing at a larger scale is, well, money is a conservative matter, right? It's relatively easy to switch from renting DVDs to streaming videos. It's relatively easy from buying CDs or tapes or whatever we used to listen music on, to the Spotifys and Apple Musics of this world. But with money, it's a lot more conservative. It's people don't trust their money to just anyone. Well, some people do, unfortunately, but that's another story. It's a conservative matter, and reputation and trust mean quite a lot in that area. That's why we really take a very serious approach to regulation, because regulation, licenses, all those tools are there for a reason. They're meant to protect the customers. They give customers the peace of mind. So yeah, it's building the trust. It will take time. It will take some time, but the benefits that this new emerging digital financial system has on offer, they are just too good to be missed. And of course, we're still in the early adopters pretty much in the early adopter stage. But go and get yourself even 3% savings anywhere in the banks these days, right? It's impossible. You can get yourself some DAI, and using either Maker's own protocol to get loans, or one of the DeFi services available out there today, and you can easily earn 5, 8, 10, even more % on your dollar equivalent, for example. So the benefits are too good to be missed. So one way or another, all of us working together, we will bring it to the masses.
Okay, thank you, Georgy. I think you made 2 really good points. First, what is missing? I agree, it's probably not convenience. So what you said, whenever you own a smartphone, you could already use your service, but it's trust, especially in the financial markets, right? And secondly, the promise that blockchain brings. You talked about DeFi that we want to talk about later. You talked about regulation that we also want to talk about later. So maybe, Jack, I can give it to you. Do you think there's something more to add? Or, for example, how does Syscoin help people build more trust, companies build more trust, or be in compliance with the regulation that we already have? And let's talk about all the implications of MiCA later on.
Yeah, well, stepping back, the way we kind of arrived to the conclusion of needing those sorts of things for money is, looking at traditional fiat rail systems. You need to analyze what the difference between a crypto one and a fiat one, and what the differences would be and the benefits would be. So the way we saw it was on the fiat rail system, like Visa debit. The only thing that's missing there is resiliency, right? So they have performance, you have scalability, you have the compliance needed for money to be able to transfer and do your checks, which fits within the monetary concepts today. It may not be tomorrow, but it is what it is today. When you use this stuff for barter, you have to comply to the standards. So the only thing that's really, because of the resiliency factor, the costs are very high on those systems, not only because they have monopolistic kind of control, but also because of the costs involved with fraud and all that, and downtime causing the fees to go up. And that's where crypto solutions, we think, can help. And the added benefit you also get with crypto is the provable sovereignty of ownership. So knowing that you own it, not the bank, is a big difference. And the resiliency factor of crypto payments is an X factor that, which is why Visa, MasterCard are trying to look for this type of system natively to do payments. And so, with that in mind, we, at blockchain solutions, got to be able to provide those scalability metrics, performance metrics, and resiliency things to be able to barter in real time. And that's, we've been working on deterministic algorithms to be able to do real-time payments, but still have the security that the Bitcoin blockchain provides us, so the UTXO model. And we, layer those solutions on to give the customers an option to do these payments. Obviously, micropayments aren't as secure as macro payments, but those are the trade-offs we want to allow customers to have without sacrificing the base layer security. So, the base layer has got to settle. It's got to be 100% secure, just as Bitcoin. But you got to give the option with a slightly higher probability of double spend, but to do micropayments. So that's the first thing we try to do for scale. Second thing we try to do is we acknowledge that most of these payments will be off-chain. So, we're developing off-chain solutions, the Lightning networks of the world with assets, and then compliance. Obviously, so resiliency obviously is tied to scalability a little bit. So when you're pushing off-chain, you get a little bit more scale, but you lose a little bit of resilience. So we believe that you need to have those backup plans. You need to have on-chain solutions for scale as well as off-chain solutions for scale to be able to bring back resilience back to what the fiat levels are or more. If it's not as good as what the fiat system is, no one's going to use it unless it's saving them a lot of money, which is what the 3% Georgy was saying. So, to be able to give the resilience and the cost savings is a no-brainer. We'll bring the masses on kind of right away. On compliance, it intersects a little bit with sovereignty, but we think there is room for opt-in systems today that require, stable coins to be able to operate. And so the problem with compliance is it also intersects with scalability a little bit. When you want to do blacklists and whitelists and those lists get big, it does affect the cost of transactions. So what we developed was, a simple signature check on the blockchain that allows permissioning to happen, but settlement to happen, obviously decentralized. And that kind of gives you the ability to do your permissioning, your compliance, your regulation, and it really is opt-in. So in long term, we believe that the maker solutions, the smart contract solutions of the world, where you're completely sovereign and you're completely private, is going to be the way forward. But today's money, when you're getting into barter and you're considering these assets money, they require that. And so any type of large scale solution that provides barter of crypto assets is going to require those solutions. And that's hopefully what we're trying to solve without sacrificing the settlement decentralization and without sacrificing the scalability metrics of your solution. So, those are the main things we're thinking about: resilience, scalability, and performance. but at the same time providing compliance.
So what you're saying is a, let's say, mix of really technical aspects of blockchain that you need to balance out to have a scalable yet, let's say, secure or silent solution while also being in compliance. Honestly, I think you already answered most of the next question that I wanted to ask, because you know, we all know Bitcoin. Probably everyone here, whatever your background is, you're familiar with Bitcoin as the first blockchain application, and it was meant to be a peer-to-peer payment method, right, or a means of payment. So it had clear implications for payments. And then in 2017, we saw the big hype, and I don't want to talk too much about it, but we all know how it went. In 2018, everything crashed. And yeah, at that time, or 2016, 17, a lot of people put a lot of trust into blockchain. And, you know, currently I always read these articles, oh, blockchain failed, which I believe is false. But what was missing in 2017 when all the attention was there that now we have to make blockchain payment use cases really successful?
Should I just go?
Yeah, sure.
Okay, so I think so the way that what we really have experienced at Maker, right, is that we see that like often like, so using crypto for payments, right? It's something where like if you already have crypto or like participate in some use case where you already use crypto, that then you will have the convenience of actually just, you know, using your crypto for payments without necessarily needing to convert it into fiat. So that would be like an extra step, right? So, I mean, I think like for the world that we see today, like I don't really see crypto being a strong use case for payments in itself, unless you have something that is built on top of it, right? So the way that, for example, when we go into a new market, this is something that I've been working a lot on in my role, right? Is that you know, when we go to a new market, we wouldn't target payments as like the first use case, you know, as possible, right? Because if people don't use DAI for something else, there's like a rare chance that they would just start, you know, paying with it, you know, from the get-go, right? Because they might have like other means. However, if you can onboard people into like a significant ecosystem where, for example, people, they will get, you know, like savings, or they will, you know, for example, like what Bitcoin represented was speculation, right? So, you know, Bitcoin's use case for payments is only really strong if it's like a function of people speculating. Where, for example, what we target with DAI is that, you know, Georgy also mentioned it before, right? We have a lot of these, you know, DeFi projects where you can actually, you know, earn, you know, relatively safe and quite significant interest rates on just having a dollar exposure, right? So for us, like all of a sudden we see that like, well, if we can onboard like more regular people into something that we believe is a use case which is much more suitable for retail, right? Because I mean, most people can understand a dollar, and you know, earning more interest rate than you currently do at the bank is, you know, like a relatively safe bet for people who don't necessarily want to speculate in, you know, what Bitcoin will be in a month, right? So if you already have people participating in, for example, decentralized financial services, or you know, just financial services on the blockchain in general, it's much easier to convert these into people who would also want to use that DAI for payments, right? So we have done quite extensive analysis into, for example, which, you know, where does the money going in from DAI into Wirex, for example, go? So, you know, like the people who actually sent DAI to their Wirex debit card, what have they done with that DAI before? And we actually found that a quite significant portion of these money came from people who had already been participating in, for example, decentralized financial services. So again, that kind of like reinforced our hypothesis that, you know, like at least like a good portion of the users who wants to spend crypto, use crypto as payments, they would probably, you know, do it because they're already, you know, doing some other use case in the crypto space itself. And this is something that, you know, especially in like, I mean, there's also two different parts of like the world, right? So we have like the developed world, you know, the Western world, it's often referred to as well, where payments are like super cheap, convenient, you know, it's present everywhere. And then you have like the emerging markets, and these two also represent like quite different regions and structures, of course. But like from our perspective, what we have seen is that like if you can get people to start doing something that benefits them personally, so for example, interacting with like digital savings, personal wealth, something like that, then they will be much more prone to actually also take the money they earn there, and want to be able to use that for payments.
Okay, thank you. Maybe what would be really interesting to me, do you know how many different people use your services? Because I think Georgy mentioned a number.
Like how many people use Wirex or DAI?
DAI.
No, so I mean, since we're decentralized, we
Sure.
don't really have a true conception of like our user base. However, we of course do have like working relationships with companies like Wirex, and you know, we globally have more than 900 live integrations with DAI right now. So 900 companies and projects all over the world, you know, as a minimum uses DAI. A lot of them also use DeFi services. So we have like an idea of like how big some of those platforms are. But you know, for like a decentralized project, it's very difficult for you to actually capture like the true user base, right? But we are present on many platforms that has like, you know, millions of users. You know, it's then of course like, you know, how many of those users then use DAI is of course always a question. But we don't really have like a true idea of how many people uses DAI or have used DAI.
This is what I guess, but you know, maybe you had some internal calculations to say, all right, probably around this much people use it, but never mind. So we talked about adoption. You said a lot of people that already are involved in crypto use services like Wirex. Georgy or Jag, do you see some requirements, some check boxes that we need to check first? Because before we will really see mainstream adoption, not only by retail clients, but also by companies, by industrial companies, SMEs, bigger companies. What might be holding them back?
I think Gustav made a good point. Was it last year we talked and you mentioned it was 300 or 200 integrations, and now you're saying 900 companies have integrated DAI. So that's, I think it's very representative of what's happening. It's very representative of what was missing back in 2017, which, by the way, I'm sure was a very healthy thing to happen to the industry, right? What was happening second half of 2017 was wrong and unsustainable, but quite natural for any nascent industry where people see opportunities, and that attracts all kinds of players, right? And that creates this fear of missing out and that type of behavior. So it was a good cleanup for the industry. So I like to think that the quality projects stayed and keep developing. So not only DAI is integrated by 900 companies now, 900 projects integrations in place, but also if you look at the larger institutional players, more and more big names are coming into blockchain, into realizing that this technology is there to stay, and that one way or another they need to adopt it to not be left behind, right? Including Visa and MasterCard, both have recently announced that they are becoming a lot more open to crypto. Wirex becoming the first crypto-friendly or crypto-native company to get a principal membership with MasterCard, and actually not MasterCard publicizing that fact probably more than Wirex itself. Although, of course, you can't compare the sizes of the companies. Then you see all the governments talking about central bank issued digital currencies, right? The government stable coins, the digital yuan that China has already launched. All the talks about Facebook with the Libra. You know, back in 2017, nothing of that was there, and that is a big driver for adoption. Once companies, institutions, governments start paying attention to it, it's not yet known whether most governments will launch their central bank digital tokens on blockchain or whether they will use any different technology, but they're definitely looking into blockchain technology, right? And there's a high probability that at least some of them will actually use it. So I think we're on a good path. what happened in 2017 was a healthy cleanup of the system, and yeah, it's evolving. It's all quite natural. If you look at how long the same processes took to develop in the in the previous centuries with changing from shells and stones to gold, and then to coins, and then to paper money, and then to electronic money. What's happened now over the course of only 10 years or so is quite impressive.
All right, I think you make a good point. Maybe as someone being involved in it currently, it feels like things cannot move fast enough. But looking into the past, you're right, things are going actually at a pretty fast speed. If you think not really much is missing, I think there was one point which we now somewhat address at a European level, which is as soon as we talk about decentralized applications, about blockchain, things don't stay in one legislation. It becomes global as soon as you turn on the key. And I think because of that, a lot of people thought that blockchain and all these cryptocurrencies, cryptographic tokens, whatever you want to call it, are somewhat unregulated, are operating in a gray area. And I was always wondering, how can heavily regulated companies use something that has a lot of legal uncertainty? So maybe, Jack, is this a good topic for you that you could share some insights about? And I think, with Mika as well, we have a somewhat European answer coming along. And if that is good or bad, we can discuss later.
Yeah, and right now, just validating that what we have today as an industry is we have a bunch of crypto users that already are participating in DeFi. They're already doing things. They've already been holders of crypto. And of course, they're going to want to spend their crypto. So it's a cool thing to be able to go into a stable coin and buy things with it. But the masses are going to be driven by enterprise rail systems that need to be developed. At least that's what we're seeing. That's how the internet developed, right? You had governments that said that internet's never going to work. And then you had bulletin board systems where users users signed up and interact with one another, but it didn't take off until the enterprises got on board and created the server infrastructure so that people could log in seamless ways. And because there's monetary aspects to it, they can make money doing so. And so in a similar context, we think it'll take enterprise adoption to get this stuff away from just casual crypto users that want to spend. So it's not a direct benefit to do payments. Right now, it's more of, I already have crypto and I'll do payments. And so if you want to bring those direct benefits, you'll have to compete against existing rail systems. And like I was saying, the only thing really you could do is the sovereignty and the resiliency to cut down costs. And the sovereignty, is something that Bitcoin provided and you want to hold dear to your heart, but enterprises don't value that as much. Enterprises, at least they're on the beta prototyping phase right now on the stable coins mostly. And what they're concerned about, obviously, they have to work under regulated frameworks. And so if enterprises were to drive this thing, they're going to need to work under existing frameworks. And that's, what we're trying to work with. Every enterprise that we're dealing with is saying the same things. And so we're developing solutions for them in a way where, again, we're not going to take away decentralization. We want the decentralized settlements to happen, but you want the ability for them to permission so that they can work in the existing frameworks. So leading up to tomorrow, when the frameworks ease up and regulators realize that ZK snarks or some type of privacy information on the system is there, and therefore now we're not able to detect who is doing what. At that point, when they ease up, then you switch from the existing frameworks to something new, and then stablecoins will start to act in a different way. Maybe at that point, there's no stablecoins and there's people are directly interacting with crypto-based assets or some type of other systems. So having those permissioning systems there allows for existing enterprises to start building and bringing those rail systems to life and so users can start using it en masse. And just as on the technical side, we need one more layer of performance and one more layer of interoperability. We're just on the base roots, so basically being able to do more than a couple of 100 TPS without losing decentralization, and being able to transact more than 1 or 2 blockchains at a time through bridges. And so we've done one version of a bridge, which is direct, but there's a lot of research happening to try to generalize that using some moon math like ZK snarks, Starks, crypto economics, as well as on the payment side, increased resilience, which is again one of the main aspects of bringing that payment system to life, is resilience factor. On the resilience, we want to offer the smart fallbacks to layer 1. So if there are issues with layer 2, you can always fall back. ZK snarks, Starks would help. The prevention of collusion and other game theoretical attacks, and crypto economics. So, resilience is a big topic. Permissioning is a big topic that we touched, and another layer of performance and scalability without sacrificing decentralization is needed. And that's all some stuff that we're working on. We have really good handhold of those things, but we need academia to come in and verify them, so that we're safe to use those systems.
I think, Jag, you made a lot of interesting, especially technical points here. Gustav, Georgy, would you like to expand on his views, or should we maybe move on to another topic you mentioned, Jag, about, let's say, technical compliance to regulation?
So, I mean, I think to like a lot of the stuff that you said, Jag. I mean, I definitely think that like some parallels can be drawn, right? But I think in like technical regulation is like regulation, like the technical side. I mean, especially what we have seen is, with these systems being like global from day one. That also means that like it's like a completely new category, right? And the frameworks for regulating stuff like that is of course like ever developing. What has been seen so far is that you would do like regulation on the edges. So a lot of these currencies are regulated in their local environments in like the shape or form that they're present, and that's also why Georgia, for example, why they have an e-money license, right? Because if not, they wouldn't be able to provide the service that they do. Like we have like to some of the stuff that Jag says, I think we have like two very different approaches to like the same problem, right? We work a lot in emerging economies, for example, which is where enterprises and the local traditional financial systems often just doesn't really work, right? There's also like a very big, just if you look from like a global perspective, like finance has a general bias against people, right? So depending on where you are from, who you are as a person, potentially what religion you have, what is your origin and race, or your current location, you will get wildly different opportunities within traditional finance. So what we're really looking to do here is go in, and which we're already doing today, is provide like equal services to everyone in the world, right? So creating an alternative to the local financial systems, which would be completely unbiased. And by doing so, we actually going in and giving very, very big benefits to people who come from these places where they all of a sudden can participate in a global financial system on the same level as people from more privileged countries or places, right? So when we kind of like take a look at it from that front, and we see that is kind of like the mission statement of the problem that we want to solve, right, is to make sure that like the underserved parts of the world is served equally. Then we also have more of a grassroots approach from that standpoint, right? Before I joined Maker, I lived in Argentina for a year and a half, and I worked out there, and I got paid in pesos. And I mean, if you want to try go the enterprise route in a place like that, I mean, that's simply just not possible, right? You will very, very quickly be shut down by the regulators who want to keep their prime for fiat currencies intact. Even though these fiat currencies are massively plagued by things such as inflation, uncertainty, and the banks just being able to like freeze your accounts, capital controls, restrictions on the individual. So moving a system like that to the blockchain would just further increase the control that they could actually have over you as an individual. This is also something that if you look at like central bank digital currencies, it will be very interesting to see the frameworks that will be laid out on that, because so far we have seen the more socialist, borderline communistic countries being very interested in implementing these systems, right? Because if you do a CBDC, a central bank digital currency, on a permissioned ledger, on a permissioned blockchain, well, all of a sudden you, as the central bank, as the governing financial entity, you will have unprecedented control over what people can and cannot do. So that's like from our standpoint, we really need this to be as open and free as possible. There shouldn't be anyone enabled to do actions against the users of the currencies. It needs to be in the wild. However, of course, in places where local regulation is needed, you will see companies such as, for example, Wirex go in and take the role of actually being that regulated body that will then allow people access to use the currency. So that's kind of like, I think, the approach that we have had a lot of success with, which means that DAI is blossoming a lot in emerging economies such as, for example, Venezuela and Argentina, where we also work with a lot of local companies, some of them regulated as well, not in Venezuela, but in Argentina, for example. But at the same time, we also have the ability, because if something is permissionless, we don't need to give anyone the permission to use it. And that also means that decentralized currencies such as DAI can also be picked up by regulated entities such as Wirex. So, by operating this way, we kind of like get a little bit the best of both worlds. And we also see a lot of interest from institutional corporations. However, something like USDC, which is, this centralized stablecoin issued by Circle, they might, at the moment have like a little bit more interest from institutions. However, I think like the problems that we're solving in these emerging economies are, much more important for our value mission, which is, bring equal opportunity within the financial services realm to everyone around the world.
Yeah, just to be clear, like I'm not a proponent of enforcing compliance, but I think to your point, there would be a parallel solution where today, some of the enterprises, they're not even willing to hear solutions unless it's able to be compliant. And so, we already have DAI on our system. So DAI is an open, permissionless, decentralized token on our system that's moved over from Ethereum, and you're able to leverage UTXO-based asset and security of Bitcoin and the performance of Syscoin to pay for the stuff. So you can already use DAI to do payments today at scale. But what we're saying as enterprises, that it's a showstopper right now. They're not even starting up. And if we say that enterprises are prerequisite to bring the rail systems to enable this stuff, maybe not in emerging markets so much, but on emerged markets in the Western world to start, the enterprises are guiding the direction there. And step one is to ensure that it's going to be compliant. And we know in the long term, again, when you come with cryptographic assets and it's math, privacy is inherent. And so in the end, we're going to need those solutions and regulators to understand. But step one is to get there, to bring the people and the masses into the DAIs and the permissionless currencies. But to get them there, they need the regulated approaches. And that's the problem we're trying to solve, is to give the option. It's not a solution where everyone is forced to use that system, but it's an option for those enterprises that need to build those, and the regulators won't shut them down as a result. If you start to say, well, we will do KYC email checks on the on and off ramps, then you start to affect resiliency, and you're increasing costs, which is what we're
doing. That. I don't know a single on and off ramp that doesn't have KYC.
Yeah, what we're saying is you want to build that right into the protocol at the permissioning layer. So the layers of settlement is decentralized, but the transacting and the permissioning is happening so that the blockchain won't even settle that transaction unless it's had the requisite checks. So if you're doing it on the on and off ramps, then you're going to need a Wirex type of solution where you're transacting in fiat but settling in crypto. Or what we're saying is a native crypto to crypto transfer without the need for middlemen, but you have the native checks in place by the people who potentially run the project or a consortium of projects. It's not done on a Hyperledger instance. It's still done on a decentralized system, but the permissioning is a concept done on top with a signature that's encoded in the blockchain. The blockchain verifies that. So it's a new concept, I think, that hasn't really been done, but it's something that's being pushed to us by the enterprises as a potential solution. So we built it as an opt-in feature for those. And so DAI is on our system, but it doesn't have those features. So you can use it in the same way DAI is being used to pay on Ethereum. You can pay on Syscoin without any checks or anything like that. But we wanted to give the option so that we feel if enterprises were to guide us into mass adoption, at least they have those systems in place they can use to develop it and not have regulators shut them down before they're even relevant.
I think now we full dived into a conversation about regulation, and I see that at least Gustav, I think you would like a lesser regulated or less strict rules. No?
I mean, like the rules are what the rules are, right? And like every like people I mean, most of the companies in the space, they of course comply, right? And like as they develop in their local environments, like, you know, people comply. So I'm not advocating for either or, but you know, as I also referenced earlier, that like whatever the regulators say, you know, needs to happen in these local environments. Like, you know, you have, you know, for example, our partners who will then comply accordingly, right? So I'm not advocating for anything of that order, and I don't think that the rules are that strict at the moment, right? And I've never really heard about like the need for KYC and like crypto to crypto, you know, exchanges. I mean, you know, most of that happens on centralized platforms as well, where like a lot of them also have KYC. But yeah, so I'm yeah.
Like it's an extrapolation of where I think the market is headed. And you know, as you see, the regulators are getting tighter and tighter on stablecoins. In the EU, they want to shut stablecoins down. Where there's a few other companies, different countries, they're saying the same sort of things, that regulators are coming down on them. Just recently, a few weeks ago, SEC is now clamping down again on projects, and that may include stablecoins. So we think that when on off ramps may not be enough, is what we're saying. Like that is what exists today. But we think that when the barter systems start to be used, when you get in with DAI and you can convert to Zcash through an atomic swap, regulators catch on to that. They're going to question: is the on off ramps good enough for us? Because now you've converted without any permission or any checks, and you're doing terrorist activity or whatever. At that point, how do you catch that? And you can't, because you're in a system which is totally permissionless. So these enterprises understand this, and this is why they're saying to us, it's the on and off ramps are good, but in tomorrow's world, when the regulators come down on another level, we're seeing some of our projects already getting questioned on these things, then they're going to need answers for that. And whether that means, easing the regulators or technically giving an option to them is really it's up to the market to decide, and we're just giving the option for these companies to be able to comply today.
Okay, cool. What I wanted to talk about are two more things. Two very recent news within Europe, or from the European Commission and the ECB. First, the ECB said that they are preparing a CBDC, which I think is really interesting. Gustav, you mentioned it already. And secondly, we now have the MiCA regulation. And Jag, as you said, and I think we can all agree on that, I feel it's particularly focused on stablecoins. So maybe Gustav, you can go first. How do you feel? Are you guys at Maker with DAI affected by it, or are you well prepared to comply with whatever they want?
again, I mean, I'm not a lawyer, so I don't really have any like opinions on specific regulatory frameworks. But I mean, like as any other significant project, we are doing everything on our end to comply with whatever regulatory environments is out there. And my conception or my perception of that is that our partners is doing that as well. So like whatever is coming out, we like, and that's my perception of most of the significant projects in the space. So yeah.
And then maybe Georgy, you can add a little bit. What do you think might change for your business model to the better or worse if you had CBDCs? Would that change anything for you? What impact do you think does something like that have on the scene?
Well, it still remains to be seen in what form they are launched, but I think at least some countries will introduce something. Whether it will be on blockchain or not remains to be seen. Whether it will be just issued or just created by the central banks, and then private sector would be used to kind of create the interfaces for the end users, or whether the governments would to take the risk of doing, the central banks will try to do it on their own. I personally think that they will involve private sector in this, and that's what we see in most of those pilot projects. But yeah, the good part about it all is that the blockchain industry, the cryptocurrencies, it might not be cryptocurrencies in the end, but anyway, they're getting into the spotlights of government, and that although it creates a set of challenges for the companies in the space, having to deal more and more with regulation and licensing, etc. So let's take us as an example. We have quite a big workforce on the IT side, and we quite often hear from users, from partners, okay, with that many people, why do you not roll out new features day in, day out? Like we really want to give users the benefits of the DeFi. We really want to do this, we really want to do that, and we seemingly have enough hands to do that. But what happens in the background, all the work we have to do to just remain compliant, but we don't want to just to remain compliant, we want to anticipate the coming changes. We don't want to be hit by another rule introduced tomorrow or a year from now, right? And then have to shut down part of the services or completely, like you see those examples every day in this market. So there's a lot of investment on the IT development, monetary investment going into that. But on the flip side of all this, seeming costs to the companies, to the industry, it by the same token, it's a sign of getting governments noticing it. So it means it's getting some scale, and it means that new rules, new regulations will be there, and they will eventually allow for more trust in the system and for wider adoption. So not without challenges, but it's a positive development for the space overall.
Yeah, I agree. And you actually brought up a topic that I wanted to really briefly at least talk about. And looking at the time, I think we still should. DeFi, I think it's the topic of 2020. And what I would be interested in is your guys' opinion. A, why is DeFi so exciting at the moment? And B, maybe more important, what can decentralized finance do that traditionally finance couldn't? And so, in other words, why is it here to last? Maybe Gustav, as you work for Maker, I mean, you guys do more than DeFi, but DAI is really strong there.
Oh yeah, so I mean, I think so first off, like to people who hasn't really known that, we have seen over the last like really like 3 to 4 months, decentralized finance really taking off. There was around $1 billion locked in those protocols that time ago, and now we are around $10 billion, and you know, DAI went from 125 million back in June, and now we have around 900 million DAI in circulation. And this is really, you know, there's been so much innovation, and you know, there's like a few different factors for this. So basically, a lot of these DeFi protocols, they are being built as, you know, like you kind of call it like money Legos. So for example, you use different building blocks that different protocols have done, and when you put them on top of each other, you can really accelerate innovation. At the same time, everything is open source, so it's very, very easy for people to build, you know, further develop on the innovation of others. And you can take I think like a good example, for example, is for example the Argent smart contract wallet. You know, they build it with like a relatively small team, but are able to offer, you know, like wealth management, you know, like automatic trading strategies. You know, you can also trade there. You can do lending, borrowing, you know, savings. You know, they have like all of these like quite advanced features, where if you were like a neobank, for example, who would have to develop these, it would take you an immense amount of money to actually build it, right? Because there's so much development work going into each of those functions. However, you know, because of the way that Ethereum works, you can just kind of like take the bits and pieces that you want to put together. And that also includes on the protocols itself. So you know, the innovation has really started to kind of like, you know, grow exponentially. And then whenever we talk about things that DeFi can, that like traditional finance can't, so it can automate a lot of the processes that would, you know, normally require a lot of manpower. So, and at the same time, you can have these like automated systems. So for example, like the peer-to-peer lending protocols are, you know, very, very popular as well, like Compound and Aave. And there you use smart contracts to facilitate peer-to-peer lending between individuals who doesn't know each other, and you know, without anyone sitting and controlling these things in the middle. Because the assets have like a very verifiable value on the blockchain, so you can really count the value that comes, and that, you know, of course cuts down a lot of compliance costs, because you don't really need to verify, you know, if the funds actually exist. Another thing is we've also seen, you know, these really new models, like for example automated market makers, which is basically where, because the money, or like the digital currencies that live on the blockchain, then you can, for example, put them together inside a smart contract, and you can actually allow, for example, everyday people to become a liquidity provider by, you know, basically letting other people trade against the assets in an automated fashion. So if you look at like traditionally how market makers were working, that is like an incredibly expensive setup to set up for yourself, right? But now all of a sudden you're democratizing the access to these things. So you're democratizing the access to finance, you know, more financial services and products. And of course, this you know, goes from like a scale where we have like the relatively simple products like DAI, the DAI savings rate, Compound and Aave, and all the way over to like very, very complicated financial protocols, right? So some of it is more suitable for retail, and some of it is heavily into speculation. But I think it's really this combination of, you know, being able to build things that wasn't possible with traditional money, and then you know, having this like accumulating innovation that just like accelerates over time.
Okay, thank you for this broad introduction to decentralized finance, I guess. And I think, as said, with regards to the time, I think we are really about to close, but I would like to close this webinar with a quick question round. So every one of you can talk, let's say, 1 or 2 minutes about the next 2 questions. And these are, first, what do you think are the blockchain or crypto topics to watch out in the next 12 months? So what are we going to talk about in January, May maybe, or what do you think is most immediately the pressing topics, and the future of payments, as this is the broader goal of this webinar. How do you think, how will payments be done? How will most people facilitate payments in 5 years from now? So 2026, let's say. And I would say we do it with the introductions. Jag, you start, and then Gustav and Georgy.
Yeah, I think on the CDBC thing, I think digital identities is going to be a big part of that. Blockchain really, the crypto protocols don't really know about users or people. They're not really aware of that, but on the government side, that's all they care about. So digital identity linked to payments or wallets will be critical. I don't think that the identity solutions that are on permission chains will work out because governments are not going to be trusting each other, at least on the value settlement side of things. So some type of decentralized ledger ledgering these identities that hook up payments to it will be critical to adoption. And that's something that, not only we're working on, but other people are working on as well. So you'll see that more and more in the limelight, where I think these government applications are going to naturally evolve towards ID solutions rather than just money solutions. And on the technical side, there's a lot of work been happening on the multi-party computation, so that's related to interoperability and scalability. There's a lot of work being happened on the snarks and starks to again make private scalable solutions, and L2 on Ethereum. A lot of work been done there, but also applies to L2 on say the Bitcoin infrastructure. And payment channels is where we think most of the innovation is happening on the Bitcoin payment space, and we follow that as well. So increasing scalability, the next layer, increasing interoperability, the next layer, and government interaction with digital identities, I think, are hot topics.
Okay, thank you. Gustav, you're next.
Yeah, I think we'll see, more retail-friendly products being developed using, blockchain, like especially Ethereum protocols. Like Ethereum is really the only blockchain that has like a very, very strong innovation currently, I think. So, like we hope to see that, for example, a company like Wirex, they will be able to lure people in by offering, the native interest rates from like the MakerDAO protocol. And then all of a sudden you have like a very retail-friendly product where people, will be drawn in by the direct economic incentive by, these rates offered, for example, from DeFi, but using a trusted and regulated front end and enterprise like Wirex. So we really believe that these regulated and trusted front ends will become a big driver for adoption in these products in the future. And this will then allow people to directly link into the traditional payment system, and this is where we see the space going.
Okay, and lastly, you, Georgy.
In terms of hot topics, I think it will still be DeFi, for sure, and another one will be everything to do with stable coins and CBDCs. And that links to the second one about the payments, what they will look like. I think there will be, and I can't comment on the particular technology 5 years from now. I don't think anyone can, or if someone can, then I want to talk to that person and put some savings into that. But stable coins in one form or another will be there. Whether it be, and I think there won't be one to rule them all. They will coexist. There will be more decentralized solutions like DAI, for example, which is great for, especially good for the, less developed economies where less people than we would like to have access to, to the financial services that we in the developed world see as, hygiene factors, as something available to you by default. It can be and probably will be a lot to do with central bank issued ones. It remains to be seen how quickly and how widely the likes of Libra will be adopted, but one way or another, payments 5 years from now will be a lot faster, a lot cheaper, a lot more efficient, and borders will matter a lot less than they do now, where these days, it often happens that you get a online order and you get it delivered by Amazon Prime the same day, but if you try to pay across border for that, your SWIFT may still take you 3 or 4 days. That's just not how it should be. And with the pace of development in this space, 5 years from now, this will change dramatically.
All right, thank you. I think these are great closing words, looking at the future of payments. Georgy, Jag, and Gustav, I thank you very much for being here with me at this webinar. Thank you also to all of you who tuned in. We will send out an email with the video on demand of this webinar as well if you want to look into it or missed maybe parts, and we'll keep you updated on future webinars of the International Token Standardization Association. And with that, I wish everyone a great evening. Thanks for joining. Bye-bye.
Bye.